Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome to Season 2 of the Caribbean Business Review. I'm Joseph Cox. Now, this season, we have expanded how you can enjoy our content alongside our full Market Watch and Global Pulse newscast. And to meet the needs of different audience segments, we're introducing a 90-second market brief, a quick snapshot of regional business news. Our special guest this week is Ms. Lilia Burunciuc, World Bank Country Director for the Caribbean, and in our conversation, we explore rethinking Caribbean tourism for sustainability. And in the CBR briefing, we take on the issue of the information conundrum, truth, misinformation, and disinformation in the Caribbean. But before we dive in, two important notes. First, congratulations to Dr. Irfan Ali and Dr. Andrew Holness on their recent electoral victories in Guyana and Jamaica, respectively. We look forward to policies that foster digital transformation, food security, and inclusive growth, because certainty and continuity remain the greatest currencies business requires. Second, we must pay attention to the looming U.S. bans on fish and fish products from 5 Caribbean countries set to take effect in January of 2026. The revenue losses will be significant, but the bigger story is the upwards of 60,000 livelihoods and the issue of food security that's at stake. Adaptation strategies cannot wait. With that context, let's turn to Claudine Lloyd for some insights on what's coming up in Market Watch and Global Pulse.
Thank you, Joseph. Coming up in the Market Watch, U.S. to ban fish imports from 5 Caribbean countries. Visitor arrival jumps 10.7% in the Bahamas. And the Caribbean Catastrophe Risk Insurance Facility now provides $1.44 billion in coverage. Then in Global Pulse, Canada's unemployment rate climbed to 7.1%. U.S. manufacturing continues to contract and unemployment climbs to 4.3%. And global natural gas demand projected to jump by 20% by 2050. All that and more this hour on Market Watch and Global Pulse. Coming up next, it's the CBR Briefing.
This is CBR Briefing. I'm Joseph Cox. The recent elections in Jamaica and Guyana highlighted a broader regional challenge: how quickly information and its darker cousins, misinformation and disinformation, can move through our societies. And with at least 4 more general elections expected across the Caribbean in the next 12 months, the stakes could not be higher. Because in today's economy, information is currency. It drives investment, anchors confidence, and underpins democracy. But when facts are drowned out by noise, or worse, by deliberate falsehoods, the consequences are profound. From African elections to corporate boardrooms, disinformation has become a defining global risk. And the Caribbean, sadly, is no exception. Reliable information is the foundation of governance and investment. Accurate debt statistics shape borrowing costs. Timely GDP releases influence business planning. Tourism arrivals data can shift millions in capital flows. When information is clear, trust is built. But when data is missing, delayed, or distorted, the price is higher financing costs, lower investor confidence, and greater economic fragility. It's important to distinguish the terms. Misinformation is inaccurate content spread without intent, an honest mistake, or an outdated statistic quoted too quickly or repeated too quickly. Disinformation is different. It's deliberately engineered to deceive, often for political or financial gain. The distinction matters because strategies to respond must differ. Correcting a misquote in a fiscal report is not the same as countering a rumor about a bank default. And in the age of social media, falsehoods can ripple across societies in hours with destabilizing effect. Now, this isn't just theoretical. In Jamaica's financial sector crisis of the mid-90s, Rumors triggered runs on banks. Institutions that were solvent on paper collapsed because sudden demands for cash forced them into fire sale losses. Whispers of instability became a self-fulfilling crisis, ultimately requiring state intervention through FinSec. The lesson was clear. In small markets, perception can quickly become reality. Today, with social media spreading faster than radio or print ever did, the risks are magnified. The challenge deepens when traditional media, once relied on for balance, are themselves perceived as partisan. In such environments, false narratives don't just circulate on social media, they're amplified by outlets citizens expect to trust. The result is deeper polarization, weaker institutions, and greater vulnerability for our economies. Corporate leaders remind us that disinformation travels 5 times faster than truth online. Why does it stick? Because it plays a suspicion. It's simple, it sounds credible, and it flatters the person who shares it. In the Caribbean, where information gaps and trust deficits already exist, that mix can destabilize both politics and business in a matter of hours. So, what needs to be done? Both governments and the private sector must shift from reactive to proactive. That means strengthening statistics offices so data is timely and reliable, building crisis communication plans for banks, regulators, and state entities, monitoring not just mainstream platforms but the online fringes where rumors start, equipping citizens with digital literacy to tell fact from fiction, and above all, respecting the 24-hour rule. Institutions have less than a day to respond before a false narrative hardens into the truth. Readiness plans must be in place so leaders can act fast with credible facts. But readiness alone is not enough. The Caribbean must also consider carefully designed legislative interventions. That means updating defamation and data protection laws for the digital age. It means setting obligations for political campaigns and companies to disclose and correct falsehoods. And it means giving regulators and electoral bodies the mandate to act when disinformation threatens stability. Without a legal backbone, defenses remain piecemeal and the risks grow. However, the legislative interventions must ensure the careful balance with free expression. In the end, the challenge for the Caribbean is not only to grow our economies, but to protect the integrity of the information that sustains them. Because whether in Georgetown or Bridgetown, Kingston or Port of Spain, the truth must outrun the lie. Only then can democracy, business, and society thrive together. Now that's your CBR Briefing. This is your 90-second market brief on Caribbean Business Review. The United States will ban fish imports from Grenada, St. Lucia, and Haiti beginning January 2026 under marine mammal rules, threatening revenues and fisherfolk livelihoods. In the DR, Amazon has launched its first Caribbean hub aiming to cut shipping costs and delivery times, though local couriers fear being squeezed. Retail is shifting. PriceSmart will introduce a service fee on smaller online orders in Trinidad from October, while Bermuda retail sales grew on easing inflation, now at 1.8%. Across the region, financial resilience is rising. CRIF coverage has expanded to $1.44 billion US dollars, with nearly $390 million paid out since 2007. In Bermuda, banks posted a 139% profit surge despite rising loan stress. The Cayman Islands imposed a hiring freeze amid a projected $60 million deficit, while Turks and Caicos unveiled tighter work permit rules. On the economic front, Belize recorded higher imports but weaker exports, while inflation there rose 1.2%. Barbados secured a $100 million IDB loan to expand credit access for MSMEs, and Grenada formally joined CAF. Elsewhere, Guyana is moving to establish a U.S. pre-clearance facility at Chedijagan Airport, and St. Kitts and Nevis has relaxed its citizenship rules to broaden dependent eligibility. Now that's your market brief. I'm Joseph Cox. For more on CBR, look for us on YouTube and Spotify.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Still ahead on Caribbean Business Review, a conversation with Lilia Burunciuc, World Bank Country Director for Caribbean countries, as we discuss rethinking Caribbean tourism for a sustainable future.
But at the same time, when you look at how much revenue per passenger the Caribbean countries are getting, is less than any other region in the world, which means that there is quite a lot that countries can improve and change to get more.
Welcome back, everybody. This is the Caribbean Business Review, and I'm Joseph Cox. And today we're going to be speaking with Lilia Burunciuc, who is the World Bank's country director for the Caribbean countries. And we're looking primarily today on a perspective that she shared a little while ago about rethinking Caribbean tourism. And she's looking at building a sustainable, inclusive, and resilient future. Now, in welcoming you to the program, Lilia, I wanted to raise with you a couple of issues. And it struck me that in the article, one of the references you made was that, there needs to be this transition in from dependency on cruise tourism over into the overnight. And you anchored it in some metrics and so on in terms of, the expenditure patterns, etc., etc. But I'm curious, how feasible is that transition that you reference within the context that, for example, Jamaica, 50% of the tourists is cruise, the Bahamas and Cayman, probably about 75% of their market is cruise tourism. How feasible is that transition, and how do you really envision that sort of transformation occurring over the, I would say, medium term?
So cruise ship tourism is very important for the Caribbean. But the world is moving, and the tourism sector is moving worldwide. And more the tourists are looking for different type of experiences. Nature-based tourism, cultural tourism, venture tourism. And these are the types of tourism that need to be developed faster in the Caribbean, because the Caribbean is not adopting these new types of tourism as fast as some other parts in the world. And the argument that our tourism report is making, we just prepared a regional tourism report, the World Bank issued a regional tourism report, is that countries, the Caribbean countries, can get much more revenues and economic and social benefits from the tourism sector if they implement a few changes. More can be done regarding the cruise ship tourism. The countries can, and we can talk about this later, countries can employ various actions that will allow them to get more from the cruise ship tourism. Also, developing other types of tourism that I just mentioned. that the spending per visitor, if you compare the cruise ships with the adventure or nature tourists, is 24 times. So we get 24 times more from one tourist who comes for adventure tourism and or nature-based tourism, and a tourism who just visits on a cruise ship.
No, I hear you on that, but one can't ignore the fact that, for example, for 2024 in the Bahamas, they are referencing that they earned roughly $1 billion just from their cruise sector alone. No, just from a straight economic standpoint, that is going to be a hard sell for any kind of thing. And frankly speaking, when you look at the Bahamas, I'm not sure to what extent, for example, nature tourism would have any real appeal for what I have seen thus far, to be honest with you. And places like Aruba, that would be out of the question, to be honest with you, because Aruba, as you know, is a desert. They import everything.
Yeah.
You know, I that's what I'm trying to explore with you. How feasible is this really and truly? I can see it for places like Dominica. Don't get me wrong. I get that. Dominica, there's a clear point. Probably St. Vincent, to some extent Grenada. But beyond that, probably St. Lucia. Beyond that, I'm not sure how does work within the larger.
Yeah, this is actually a very good question, because nobody is saying abandon the cruise ship tourism. No, the message is countries can get more out of the cruise ship tourism. This is the message. And by the way, when you look at the cruise ship tourism around the world, the Caribbean is the biggest. There are more cruise ships in the Caribbean than in any other region in the world. So it's a huge business. But at the same time, when you look at how much revenue per passenger the Caribbean countries are getting, is less than any other region in the world, which means that there is quite a lot that countries can improve and change to get more out of the cruise ship tourism. So the point is not replace it. The point is develop and get more out of this segment, tourist segment, but then also invest in new tourist segments, because their priorities for the tourists are shifting. They are more into, and I'm not only talking about the nature-based tourism. Of course, some islands will be more suitable for that than others, but it's also cultural tourism. It's also culinary tourism. It is different types of tourism. And if one island may not have the same type of nature as in Dominica, there are carnivals and festivals, as far as I know, on all islands. The cuisine is interesting, and tourists love. They love learning about new cuisine and tasting new types of food. So, yeah.
No, your
that's
point.
that's
No,
what I wanted to say.
No, I get it. No, I get what you're driving at. And it actually segues into a very interesting development, because part of the challenge I would advance to you is with the Caribbean tourism product is that our linkages are weak. Backward and forward linkages are very weak. And I'm just wondering, and that is when I speak to that. But of course, I'm referencing things like how the agricultural sector will feed into the tourism sector, et cetera, et cetera. Now, from your use state, what is it? What are the real imperatives to really drive and strengthen those linkages so that we get more of the local foods, call it the Caribbean foods for this conversation, but the local foods into this space, more of the products and services that will be offered by the local, and how to that sort of cultural dynamic into a renewed and refreshed tourism product?
Yeah, very good question. Now we're talking about a different segment, the hotels and often all-inclusive, but not only. You're right that we call it like economic leakage, meaning that, yes, there are big hotels. And by the way, in the 80s, this type of tourism was developed because the countries in the Caribbean were losing their manufacturing revenues from manufacturing jobs in manufacturing and agriculture. And tourism was the new way of creating new jobs, and of course developing the economy. So at the time, countries tried to attract the investors and provided a lot of incentives for the hotels, including the incentives in terms of importing a lot of food and then other materials that they needed, because this was not available on the islands at the time. It is very important to look back at all these long-term concessions and see, or long-term tax exemptions and duty exemptions, import duty exemptions, and see how the economies of countries can benefit more and how the linkages can be established. I was talking to the private sector in Jamaica recently, and we were actually at an event at one of the all-inclusive hotels, and there were visitors from outside at that event, and the foreigners were saying, "Oh, we know about these very tasty local fruits and vegetables in Jamaica, but we don't see any at the hotel." And then the private sector, the Jamaican private sector, they said, "Yeah, about like 10 years ago, we were not ready to supply the fruits and vegetables to the hotels to meet the standards in terms of quality, also in terms of quantity, and also in terms of being able to supply it year around with no interruption. But today, we are ready. We do need, and these are like bigger suppliers. The point they were making is that the governments may need to provide a little bit of support to them. And by the way, this support to them in terms of setting the programs for backward linkages, maybe eliminating some of the tax exemptions for the hotels to import the food, because then they don't have a level playing field, for the local suppliers who don't have tax incentives and the hotels that have tax incentives. Anyway, more can be done to provide these linkages to the hotels. Another area that I would like to mention, it's not only the all-inclusive hotels, it's also other types of tourism, because even when tourists come and stay not at all-inclusive hotels, you need support for the small businesses to be able to create these other opportunities for tourists, to be able to go to like concerts. There are more reggae probably concerts outside of Jamaica than in Jamaica.
That is true. But Lilia, before I take your point well, and I actually agree with you where in terms of the music and the various festivals and so on. But I want to go back just a little bit on the issue of the linkages and the procurement processes, because part of the thing that we need to take on board, I would argue, in this conversation is that the bulk of the hotels, at least the major chains, are owned by global establishments. They are operated by global establishments that have centralized procurement practices. So I don't know that saying the government to remove whatever incentive or duty incentive that may exist, I don't know that would necessarily treat with the challenges that they face in terms of meeting particular standards. You quite rightly referenced the quantity and the quality and reliability of supply, etc., etc. I don't know that any Caribbean government, frankly speaking, will be able to do that, to really ramp up that. Isn't the converse actually true, that the onus is on the private sector to organize themselves in a sufficient manner to meet those standards and therefore be able to compete effectively?
Everybody will have to chip in, so to say, in terms of the actions. First of all, the governments need to see if there are any incentives in place for the big hotels that makes it easier for them to import. If there is but they have the hotels have a preferential treatment and they don't have to pay import duties, or these import duties are reduced for them, this needs to be looked at first. Secondly, for the local producers, governments around the world are investing in helping the private sector to, first of all, establish the standards and then help them meet the standards for food production. And as I already mentioned, 10 years ago, local food producers in Jamaica maybe were not at the level. Some programs were tried, were not at the level that they are today. But today, the private sector is interested in stepping in. But they need a level playing field, but they also need some incentives, not incentives, but some support from the government to negotiate, because it's very difficult for the private sector to negotiate with the hotels. If there is support from the governments to negotiate with the hotels, I think we can make more. Overall, the Caribbean countries can make more progress. And I've traveled a lot throughout the world. I've stayed at the same big chains in other parts of the world. I was Bali in Indonesia, in Delhi in India, in the Philippines, and so on, and stayed at all these chains there. Somehow you see the local products in the hotels, and it's the same hotel chain with the same centralized procurement rules. They are able to negotiate, governments are able to negotiate with those hotels and set programs and systems for their backward linkages. And I think if they are successful, the Caribbean could be successful as well.
All right, point well taken. But then it also carries me on to another point, because part of the challenge, and take Jamaica out of this one, because Jamaica is probably the exception to this rule. How many countries within the Caribbean have anything whereby they actually monitor the quantum? I noticed in your article you reference, I think between 2010 2013, 7% of the incentives were quantified at roughly 7% of GDP. But whereas that might be a notional figure, I suspect, how many countries actually measure through what we, the economists, would call the tax expenditure budgeting? How many of the countries actually take on board that sort of process? And as I said, take Jamaica out of it, because I know Jamaica has it, because I was one of those who helped put that in place. But tell me, and what is the World Bank? What is the role that you would see the bank having in building out that sort of framework where we no longer speak in notional terms, but concrete terms about this is the value of the incentive that you have provided, this is the impact, this is the return that you're getting from it, so we can have a more coherent type of response?
This is a very good point about knowing the situation and knowing the cost of this. We call them tax expenditures. These are, in a way, tax incentives. Apart from Jamaica, I don't think other countries have the capacity to really do this analysis, because there is a huge deficit of data. First of all, if you have a deficit of data, it's very difficult for you to do the analysis. And then also the capacity to do this type of analysis. So we at the World Bank, and not only us, other development partners as well, are happy to step in and work with the governments to help them do this analysis. You already mentioned some of the numbers that we came in our report, tourism report. It took us 2 years instead of 1 year to do all the analysis in that report. And one of the main reasons was data. It was so difficult to get the data. We had to actually do many surveys on our own to be able to understand and analyze the situation, because it's very difficult to do anything when you don't have the data. So our advice to the countries, with the help of development partners on their own, if they can, or using local think tanks, or using the universities, UI has very good capacities, to do a very good analysis of what the countries are getting from these tax incentives for the hotels. Of course, they're getting the jobs, but is this enough? And all the revenues that the governments have lost and then underinvested in their economy during that time, is this equal or more than the benefits that the countries got from getting more jobs? The hotels also provide a lot of additional challenges for the economies, for example, waste management, which is in a way responsibility of the government, and let's say other environmental damages. On some islands, 80% of wastewater goes into the ocean. Wastewater management is another big challenge for the country's islands. So it's not only the revenues they're getting from the hotels, but they also need to look at the environmental impact and other impacts on the island that detracts from that. So
Absolutely.
this type of analysis needs to be done.
No, absolutely. Well, there have two things. Let me respond to your last point first. One, I remember some years ago, don't try and date me now to tell you exactly when it was, but I remember some years ago, an argument of this nature was advanced, and there was tremendous pushback from the cruise lobby, one, and two, frankly speaking, there was division among even some of the countries because you know how powerful these lobby groups are. So I'm not even sure where that is now and if that is even feasible to do it. But I take your point quite well. The other aspect of it is that it seems to me that in measurement of the tax, the incentives, the value of the incentives, what we call the tax expenditures, the honest truth of it is that what I would suspect is required is a multi-year project. This is not for those countries that do not have the data sets in place. What it will necessitate and what happened in the Jamaican experience was that, for example, the tax forms had to be redesigned so that it actually captured the data in place. Then you had to have, of course, probably additional training for some persons who are going to be looking after these things or monitoring them, etc., etc. So it is not a short-term type of intervention. But I suppose the question for you would be, from where you sit, because you are the country director for the Caribbean countries. To your knowledge, has any of the countries even expressed an interest in doing this sort of analysis?
It will be very difficult for countries like St. Lucia and Grenada and Dominica to develop a full-fledged capacity to do this kind of analysis because it's expensive. I would say that in this case, it's better to develop the capacity at the regional level. Use regional institutions. Use regional institutions that can, of course, build whatever capacity is needed to collect the data and systems that are needed to collect the data, but then build the capacity to analyze and monitor it throughout the years, because I agree with you, one-off analysis is useful, but not that useful. You also need to be able to see it in the longer term. So the regional tourism organization, the Caribbean Tourism Organization, or for specific regions, the OACS Commission. So there are regional bodies where this capacity can be developed and can be, I think, very beneficial, and dealing in this way with the capacity constraint. But let me go back to the first point you made, because you are right. The cruise ship industry is super powerful. It's very difficult to negotiate with them. And they're very skillful at playing one country against the other. But I think there is a reason why in the Caribbean, the revenue per passenger is the lowest. It's even higher in the Pacific, where it's the same situation. There are, countries, separate small countries, but it's higher there because they somehow found a way of negotiating more as a region rather than individual countries. There are good examples. Barbados recently increased the tax for the cruise ships per passenger for departures, and it actually was quite successful. If some countries can do it, others can probably do it as well. But what I would like to suggest is that I think would be very good if the countries get together. I know that's politically very, 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 very difficult, but I don't see other way around it. The countries will need to get together to negotiate with the cruise ships. And I already mentioned in some discussions and for us, why not And this is an idea that came again from one of the countries, one of the ministers from the Caribbean countries. Why not include Caribbean environmental tax for the whole Caribbean Sea? So no matter what country you go and visit in the Caribbean, if you are in the Caribbean Sea, you pay, I don't know, $5 per person or whatever, a Caribbean tax, which is uniform throughout the Caribbean Sea. This could be one. Of course, another one could be some local, other local taxes like waste management or any other taxes that can be then used by the countries to offset, first of all, get the revenues, but also offset the damages, the environmental damages that are being brought by the Caribbean.
No, right, that's fair enough. That's a perspective. I'll be very honest with you. If they couldn't even agree on a $1 tax for the air travel, for the air industry, and that was supposed to have been used to offset some security costs, good luck with a $5 charge. But we're running out of time, so let me move quickly on to another aspect of it, because artificial intelligence is here. The ILO has indicated that some 39% of jobs that already, use some elements of AI might be either eliminated or absolutely transformed by 2030. I'm raising this within the context. A lot of the jobs in tourism right across this region, or let's realize that tourism occupies anywhere between 7 to 90% of GDP right across this region, dependent on the country, obviously. Most of those, that's a service industry. A lot of those tasks, at least at the lower levels, the mid to lower levels, can easily be replaced by technology. How do you see the environment now, from where you sit as an international development partner, to basically future-proof, as it were, the workforce within this region? And particularly, of course, as it treats with the tourism sector.
When I look at the Caribbean, and I think, where are the opportunities for future growth and development? I think the whole digital sphere is super important. And the Caribbean, frankly, blessed with a lot of people with a lot of, creativity and rich culture, music. I know the animation industry is very strong. And in general, I think the creativity industry in the Caribbean is one of the industries that has a lot of potential. And when you combine this with the digital development, good connectivity, using the new digital tools, it's one of the possibilities for the future development of the Caribbean. But a lot needs to be done to make sure that the region doesn't miss this opportunity. First of all, in terms of setting an environment that will allow all this creativity and all the potential to be realized, improving digital connectivity, improving on the cost, because it's very expensive. Today, the connectivity is very expensive. Digital connectivity is very expensive. Making sure that the rules are harmonized so that it's not a different rule in each of the islands. The next aspect is digital skills. Improve the training on digital skills. And make sure that these skills are also transferable from one country to the other country in the region and are recognized. And then also improve the offerings. If we're talking about tourism, tourists are looking for new opportunities, for new types of like entertainment and so on. And the hotels need to get more prepared for that. Actually, tourists are also looking for more sustainable tourism. And as our study has shown and the survey has shown, the tourists are willing even to pay more for the sustainable part, like to pay an extra small fee, that if they know that this money is going to be used transparently to improve the overall environment for sustainable, for example, in renewable energy and other sustainable parts of the tourism, but also the economy as as well. So investing in creating an environment to embrace this digital world and investing in skills and making sure that this is then incorporated in the various businesses, hotels and tourism, but any parts of the economy as well, I think would be very beneficial for the Caribbean countries.
No, indeed, I would absolutely agree with you. And as we leave this conversation, from where you sit, you now for the bank, what sort of what are the policy areas that you would really envision for true deeper engagement with this region as we seek to develop and really achieve our full potential?
I'll mention 4 areas that
Okay.
we actually went through thinking exercise. If we were to select 4 critical priorities for the region, what these 4 critical priorities would be. So I'll mention these 4. It doesn't mean that the other areas are not important, but we thought these 4 are really critical and we would like to work on them. The first one is for the region to become one economic space, free movement of goods and people. The region, we know, has a lot of small countries with huge problems with these economies of scale, because small economies, of course, if you don't have the economies of scale, it's very difficult to compete. So for the region, becoming one economic space is very, very critical. And this pertains to rules and regulations, trade facilitation, connectivity, becoming one economic space, also connected internally, but also externally. So one economic space is one. And we, as the World Bank, are increasingly supporting regional programs, trying to help to move in this direction. The second area is continue to strengthen the resilience. We all know that resilience is the name of the game in the Caribbean, given its geographical location, given all the natural calamities that happen very often. And by the way, this is the region with the highest impact of calamities as percentage of GDP in the world. So continue to invest in resilience, both with external assistance, but also a lot can also be done internally in terms of zoning and land use codes and so on. The third area that is important, we already discussed it, is the digital, embracing the digital transformation, because this is the future. And I'm not going to say more here because we already discussed it. And the last one is continue to invest in human capital, because main capital of any country is its human capital and skills. Yeah. Let me stop here.
Yeah, no, absolutely. And I could never disagree with you on that. So what's really left for me to do is to express my profound thanks to you, Lilia Burunciuc. Yes?
Yes.
Who is the World Bank's country director for the Caribbean countries, for coming and sharing her thoughts with us today. And indeed, we do hope that we'll be able to get you back from time to time as we continue to explore this process of development right across the Caribbean. So thank you so much again.
Thank you, Joseph. It was a pleasure.
Indeed.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Welcome to Market Watch. I'm Claudine Lloyd, bringing you the latest economic and financial updates from across the Caribbean and beyond. The United States will ban fish imports from Grenada, St. Lucia, and Haiti starting January 2026 after ruling they failed to meet marine mammal protection standards. For Grenada and St. Lucia, where fish exports like tuna are vital foreign exchange earners, the ban threatens coastal jobs and rural incomes. Haiti's 40,000 fisherfolk could also face further strain. With the U.S. as their primary market, the decision poses urgent risks for food security and regional adaptation strategies. Turning to resilience, the Caribbean Catastrophe Risk Insurance Facility now provides $1.44 billion in coverage, nearly triple its initial year. Since 2007, CCRIF has made 78 payouts totaling almost $390 million, including $42 million to Grenada after Hurricane Beryl. The facility's quick payouts, often within 2 weeks, remain critical for helping governments stabilize economies after disasters. In Bermuda, bank profits surged 139% in Q1 to $115 million despite rising loan stress, lifting annualized return on equity to 26%. Retail sales rose 3.6% in April, while inflation eased to 1.8% year on year. The Bahamas reported a 10.7% rise in June arrivals, led by a 14% jump in cruise passengers. Air traffic fell slightly, but officials expect Carnival's new celebration key port to boost Grand Bahamas numbers. In Jamaica, advertising multimedia management is scaling the region's first LED delivery bag advertising network in partnership with Seven Crave, expanding from 10 to 40 riders in Jamaica. Barbados has secured a $100 million IDB loan to expand its credit guarantee fund for MSMEs, covering up to 80% of loans with support for women-led firms and exporters. Belize recorded 1.2% inflation in July, driven by food and housing, while imports surged 12% and exports slipped 3%, widening the trade gap. In our country roundup, the CBD is steering cultural industries towards sustainable financing linked to climate resilience. Cayman imposed a civil service hiring freeze to rein in a projected $60 million deficit while tightening church oversight ahead of a FATF review. Guyana plans to seek a U.S. pre-clearance facility at Cheddi Jagan's airport. United Oil and Gas has secured its final license for offshore exploration in Jamaica. PriceSmart will add a $33.75 service fee for small online orders in Trinidad this October. Amazon launched its first Caribbean hub in the Dominican Republic, cutting delivery times and costs. Grenada has become a shareholder of CAF, boosting its access to development finance. St. Kitts and Nevis will expand dependent eligibility in its citizenship program. And St. Lucia will pilot a new World Bank tool to combat trade-based money laundering. Before we close, let's take a quick look at the region's currency and stock market movements. Turning to the currency markets, the Bahamian dollar remains pegged at $1. The Barbados and Belize dollars both trade over 2 to 1, while the Jamaican dollar holds at $161.31 to the US. Guyana is at $218.80. Is at $131.50, and Trinidad and Tobago dollar steady at $6.80. On the stock exchanges, the GSC index advanced 0.39% to 3,020,622 points, while the all TNT index slipped 0.7%. The Barbados local index edged down 0.04%, and other markets closed flat. Top gainers included Margaritaville Turks up nearly 15% and Berger Paints Jamaica up 11.5%. Among the losers, Prestige Holdings dropped 9.2% and National Enterprises fell 4.7%. That's it for this edition of Market Watch. I'm Claudine Lloyd. Stay informed, stay ahead. Global Pulse is up next. Welcome to Global Pulse. I am Claudine Lloyd, bringing you the latest international developments shaping trade, markets, and the global economy. Global trade strains are weighing heavily on industry. U.S. manufacturing contracted for the sixth straight month in August, with the ISM index at 48.7. Tariffs at century high levels are disrupting supply chains and freezing investment, with several sectors warning of looming price hikes. North of the border, Canada's unemployment rate climbed to 7.1% in August, the highest since 2016 outside the pandemic. The economy shed 66,000 jobs, with losses in manufacturing, transportation, and scientific services, underscoring the toll of U.S. tariffs and weak global demand. In Asia, India's economy surged 7.8% in quarter two, outpacing all major peers, driven by strong manufacturing and services. But Washington's 50% tariffs on Indian imports threaten momentum, sending the rupee to record lows. In Brazil, growth slowed sharply to 0.4% in quarter two, bringing year on year expansion to 2.2%. Analysts expect further cooling into 2026. Energy is reshaping geopolitics. Russia and China finalized the Power of Siberia 2 gas pipeline, locking in 50 billion cubic meters annually for 30 years, cementing Moscow's pivot to Beijing after losing European sales. Meanwhile, U.S. LNG export hit a record 9.3 million tons in August, with Europe taking two-thirds amid steady prices and tight storage. In our global roundup, South Korea's financial sector union has approved strike action, demanding a 4.5 day work week and higher pay. Eurozone growth ticked up, with manufacturing at its strongest in 3.5 years, though services slowed and inflation edged up to 2.1%. The UK posted its fastest job losses in 4 years after higher national insurance contributions raised costs. Saudi Arabia's foreign direct investment rose 24% in 2024 to $31.7 billion, led by manufacturing and finance. Japan's real wages rose 0.5% in July, the first gain in 7 months, supporting household demand. And here are the headlines to watch. U.S. job growth stalled in August, with only 22,000 jobs added and unemployment up to 4.3%, raising the odds of a Fed rate cut. U.S. holiday spending is projected to fall 5.3%, the steepest drop since 2020. A U.S. judge ordered Google to curb its search dominance, but stopped short of breaking up Chrome, boosting Alphabet shares. And ExxonMobil forecasts global gas demand to rise 20% by 2050, with LNG doubling its share of supply. On the energy markets, oil prices retreated. WTI crude slipped 2.5% to 61 US dollars and 87 cents, while Brent fell just over 2% to 65 US dollars and 59 cents. Natural gas eased 0.9% to 3 US dollars and 5 cents, while the OPEC basket held steady at 71 US dollars and 32 cents. Global equities were mostly lower. On Wall Street, the Dow fell 0.5% and the S&P 500 lost 0.3%, while the Nasdaq was nearly flat. Europe also closed weaker, with Germany's DAX down 0.7% and France's CAC 40 off 0.3%. London's FTSE dipped slightly. In Asia, Japan's Nikkei jumped 1% and Hong Kong's Hang Seng gained 0.9%, bucking the global trend. That's it for this edition of Global Pulse. I am Claudine Lloyd.
Well, that's a wrap on the first episode of Season 2 of a Caribbean Business Review. Now, thanks to you, our loyal audience across all platforms, including MKR Radio. We appreciate your continued support as we continue to live by our mantra: knowledge is strength, but information is power. A special thanks to our guest this week, Ms. Lilia Burunciuc, the World Bank Country Director for the Caribbean, for her insights on rethinking Caribbean tourism for sustainability. The key takeaways: diversify and integrate tourism to support local businesses. Strengthen capacity with data, digital tools, and regional cooperation. And build resilience by investing in people and disaster preparedness. My thanks also to Claudine Lloyd for taking us through the Market Watch on Global Pulse segments. Remember, this program is also available on Spotify. And don't miss the September 7th edition of the Caribbean Financial Dispatch newsletter, now live on josephcox.org, the CBR LinkedIn page, our WhatsApp channels, and linked in the YouTube comments. You can also subscribe directly by emailing us at caribbeanbusinessreview@gmail.com. As always, we invite you to like, share, and subscribe, and follow the Caribbean Business Review on TikTok, Spotify, YouTube, Instagram, X, and LinkedIn. Until next week, same time, same place, God's willing, I'm Joseph Cox, and this has been CBR.